Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about FASTENAL CO quarterly report. FASTENAL Company provides a wide range of businesses and services through its wholesale distribution of industrial and construction supplies. The company's offerings include fasteners, threaded fasteners, bolts, nuts, screws, studs, and related washers, miscellaneous supplies and hardware, plus pins, plus machinery keys, plus concrete anchors, plus metal framing systems, plus wire ropes, plus strut products, plus rivets, plus related accessories. The company serves various markets, including manufacturing market, original equipment manufacturers, maintenance, repair and operations customers, non-residential construction market, agricultural industry, farmers, truckers, railroads, mining companies, education sector, schools, retail trades, energy industry, oil exploration, production and refinement companies, government entities, federal, state, and local. The recent increase in FASTENAL CO's stock price can be attributed to several positive developments and news items over the past year. The company reported strong financial performance with earnings beats in both Q3 2025 and Q2 2025, exceeding analyst estimates. Net sales grew by 11.7% year-over-year to $2.13 billion in Q3 2025, while net income increased by 12.6%. Additionally, FASTENAL consistently announced and paid quarterly dividends, reinforcing investor confidence. The company's strategic growth and operational efficiencies also contributed to its success. Growth in customer contract signings and unit sales drove performance, particularly from high-value customers. Digital transformation initiatives, such as the FMI technology program, continued to drive growth and efficiency. Improvements in gross and operating margins were noted, attributed to factors like pricing actions and operational enhancements. Analyst sentiment has also been positive, with some analysts upgrading their ratings and increasing price targets. Despite a sluggish industrial production environment, FASTENAL's resilience and successful execution of its strategies have enabled the company to achieve significant growth through market share gains. The primary drivers of revenue growth for a company are multifaceted and can be attributed to several key factors. Firstly, improved customer contract signings have led to an 11.7% increase in net sales. Additionally, the growth in unit sales is driven by an increase in the number of high-spending customer sites and higher average monthly sales per site across all categories. Furthermore, positive product pricing has contributed significantly to revenue growth, with a 270 basis points increase. The company's expansion efforts are also evident through the addition of 674 new FTE employees, including 379 selling and sales support personnel, 106 distribution and transportation personnel, and 189 remaining personnel for IT, quality control, and strategy and communications investments. The growth in revenue is also attributed to strong performance in specific end markets, such as OEM fasteners, plus 15.9% DSR change, heavy manufacturing, plus 12.4% DSR change, and contract customers, plus 13.2% DSR change. These factors collectively contribute to the company's revenue growth, making them key drivers of success. Net income and profit margins overview. The company's financial performance has shown improvement, with an 8.5% increase in net income from $884.1 million to $964.4 million over the past year. This growth is also reflected in a 12.6% increase in net income from Q3 2024 to Q3 2025. The operating income margin has seen a slight increase, rising from 20.4% to 20.6%, likely due to a decrease in net interest expense. The gross profit margin remains unchanged at 45.2%, while the company's stable sales and daily sales growth have contributed to its improved financial performance. However, there is a slight increase in operating expenses as a percentage of net sales, which may be a concern for future profitability. Overall, the company's financials indicate a positive trend, with increasing net income and operating income margins. The company is generating positive operating cash flow, indicating a strong financial position. The data shows that net cash provided by operating activities has increased by 4.2% to $927.8 million in 2025 compared to the previous year, demonstrating a steady improvement in the company's ability to generate cash from its core operations. The company's financial health has shown significant improvement over the past year. a notable decrease in total debt from $240 million in 2024 to $195 million in 2025 indicates a reduction in financial liabilities. Furthermore, interest expenses have also decreased, with net interest expense dropping from $1.4 million in 2024 to $1 million in 2025. This decline suggests that the company is managing its debt more efficiently and reducing its financial burden. The only minor increase was seen in the current portion of debt, which rose from $75 million to $95 million. Overall, these changes indicate a positive trend for the company's financial stability. Management's outlook on the company's strategy. The company is navigating a volatile global economy with caution. Despite economic uncertainty, management remains optimistic about the company's outlook, citing its diverse customer base and ability to innovate as key strengths. To mitigate potential risks, the company is actively monitoring economic conditions and implementing strategies to maintain market price competitiveness. Looking ahead, strong growth is expected, with a 7.9% increase in net sales for the 9-month period and an 8.5% increase in daily sales for the 3-month period. The company will continue to invest in personnel and capital spending, particularly in distribution centers, FMI hardware, and IT infrastructure. Management's focus on cost control and leveraging of costs is also expected to contribute to the company's growth trajectory. Overall, the company's strategy appears to be centered around maintaining competitiveness, investing in growth initiatives, and controlling operating expenses to drive long-term success. The company's financial summary reveals that it has a history of paying dividends to its shareholders. This is evident from multiple references in the provided pages. On the other hand, there is no record of share buybacks, indicating that the company has not repurchased any shares from the market. Concerns about inventory buildup or supply chain disruption. The company's financial summary highlights several concerns regarding inventory buildup and supply chain disruption. On page 27, an increase in fast stock sales by 12.3% YoY is accompanied by a decrease in weighted fast bin/fast vend signings by 3.2% YoY, potentially leading to inventory buildup. Furthermore, the inventory balance increased by $163.3 million, 10.5%, from September 30, 2024 to September 30, 2025, indicating potential supply chain disruption or delayed payments. Additionally, there are concerns about inventory buildup in the fastener category due to better product availability in distribution centers. Forward-looking statements also mention difficulties in collecting receivables and accurately predicting future inventory needs, short-term inefficiencies in the supply chain, and changes in supplier production lead times. Tariffs, import shipping costs, commodity steel prices, and fluctuations in overseas shipping containers can also impact product gross profit. These concerns suggest that the company may face challenges in managing its inventory levels and supply chain operations, which could have a significant impact on its financial performance. That concludes the financial summary for FASTENAL CO. Feel free to comment below, and I will be happy to answer them when possible.